This is Daniela Camboni for Kitco News, and you are watching In the Lead with Jon Nadler for the week of April 18th. Good morning, Jon.
Good morning, everyone.
Jon, first big news of the day, S&P putting a negative outlook on the U.S.'s AAA credit rating. Is this big news for commodities?
Well, Daniela, it's important to note that the S&P did not change its rating as regards the U.S. The U.S. maintains a AAA rating, the top rating available, and the news as such is really not a giant surprise. I think the S&P has made all kinds of signals in previous months that, in fact, it might alter its outlook on the U.S. from stable to negative if, in fact, it didn't see signs that the U.S. was getting its fiscal and monetary house in order. I find the timing or the release of the news a tad curious, as just last week we noticed that there was a bipartisan effort to address the budget situation in the U.S. and that the Obama administration will get its way with significant and sizable budget cuts going forward. As well, during the weekend, Timothy Geithner asserted that the debt ceiling in the U.S. will in fact be raised, and that he has assurance from the Republican leadership in the U.S. that the debt limit will be raised and that the U.S. will not go into quote-unquote default, or that the U.S. currency would not demise. So all of these things should underpin the market, but of course the S&P has a mind of its own, and certainly while it didn't spare certain other countries from ratings downgrades, it puts this out as a warning to the U.S., and I think that's what the markets are reacting to.
So, Jon, do you think the S&P news is one of the factors that's pushing gold towards the $1,500 mark right now?
Indeed, it's one of the factors, because this morning we started off almost an equal amount on the downside, $7, $8, $9. And as soon as the news came out, within literally seconds, the market was up a positive $9 or $10. Volatility will definitely continue to be the name of the game here, because we've seen a very strong push by speculators late last week to get gold and silver up to new records. Of course, they managed to do that. And of course, in the wake of that, we saw a little bit of emergent profit taking early in the morning, at least until the S&P news came out. We'll have to see how the day goes, and of course, the week as well.
Jon, I would like to ask you about interest rates. I've been hearing two very opposing points of view. A lot of analysts I've spoken to have informed me that interest rate hikes in the U.S. are imminent even before summertime. Yet Bernanke is scheduled to speak next week, and he's expected to stress that he's serious about keeping interest rates low. So which one do you think it is, Jon?
He might have to be careful with that type of signal to the market, because in fact, when you look around the world, the trend is unmistakable towards a tightening trend. We've seen China just over the weekend raise its bank reserve requirements by another half a point come the 21st of the month. We've seen, of course, the ECB a couple of weeks ago raise its own rates. So I think that the Fed may not want to be perceived as being way behind the curve here. And there's another thing to note, and that is that there's a difference between the cessation of the asset purchase program come the end of June and, of course, the first interest rate hike, which, as I previously mentioned, I expect sometime late in the fall. Bernanke needs to be careful in stating the ultra-low interest rate environment as continuing indefinitely, because, in fact, that type of posturing risks aggravating or enhancing the commodity speculation that we've seen in recent months, a factor which has brought about the very inflationary spikes and pressures which threaten to derail the economy that Bernanke is trying to get going so desperately. So it's a double-edged sword, and I think it will continue to be a battle of the hawks versus the doves on the Fed policy team. But let's wait and see what Bernanke actually has to say. I don't want to put words in the man's mouth.
Jon, you touched upon China and how over the weekend they've raised bank reserve requirements. Again, this is the fourth time this year. It's their way of fighting inflation. What are your thoughts on this?
Yes, that move by the PBOC potentially signals an actual interest rate hike, which would be the fifth one, and it could come as early as May. It is basically one in a series of combative gestures that Premier Wen Jiabao has already put into motion by saying that we need to combat inflation, we need to avert the potential social consequences of spiraling food and energy costs, and we will do whatever it takes to remove the various factors that contribute to inflationary pressures in China. And as we noted last month, inflation there was running at an undesirable 5.2% already. So I think we can expect more of the same from them.
John, finally, other factors that we should be paying attention to this week?
Well, as in previous weeks, I think crude oil will be a very pivotal factor to watch for. We've seen Saudi Arabia come out over the weekend and declare that the market is in actual oversupply, and that, of course, started the slide in oil early this morning. Better than $1.50 per barrel was lost. Of course, the S&P news actually only aggravated losses in oil, which could, in fact, spill over to equity markets and to base metal markets, potentially bringing about margin calls in that sector. So oil will be key. I think the Nigerian elections are looking like they will have a good result and that Nigeria will not see some supply disruptions. That said, the ongoing impasse in Libya continues to be a worry factor, even though the loss of production is minor from that country. So oil traders will also be kept on the boil this week, and I think we need to look at oil and, of course, the dollar as key drivers for the precious metals markets for another week as well.
Okay, thank you, John. We just want to remind viewers that this week is a shorter trading week since the U.S. stock market is closed in observance of Good Friday. We'll see you again, however, next Monday, Easter Monday, for a new edition of In the Lead with Jon Nadler. Thank you for watching.